All right, traders, welcome back to another Relentless recap. If you're tuning in for the first time, consider subscribing to the channel. And of course, as usual, for everyone, hit that thumbs up. Let's jump into it. Let's talk a little bit about today. Let's talk a little bit about this week. So first and foremost, guys, remember that day trading and investing here in the stock market, any other market, and like any other business in the world, there are risks. Day trading is not easy. It never was. It never will be. And there's a tremendous amount of risk, as most of our assets here is our cash in our accounts. And in this field, money can be generated very quickly and or can be lost very quickly. So understand that day trading is risky. Understand that if you're new, even if you've been around and you're not quite consistent, it's best to utilize the simulators. Take it slow as you go through the learning curve. Utilize a small amount of cash, aka risk money, before you really get involved in the market with size. Lastly, remember, I do not invest money for my subscribers. I will never ask you to contact me using Telegram or WhatsApp. I do not invest money for my subscribers, which also means I will never message you asking for money or personal information. And just a general rule of thumb, I do not message anyone first. Again, there's tons of fake accounts out there, so be very careful, stay safe, stay positive, all right? So let's talk a little bit about the green day today, and we'll also talk a little bit about this week. First and foremost, I will say, I believe this is maybe top 3, maybe even top 2 even weeks of the year. We had stock POL, SMFL, and a few others that were quite remarkable throughout the week. I mean, it really sucks for anybody who's like just, out missing the market. I mean, different people will take different breaks at different times. Other people will, maybe just out sick, these type of things. This is not the type of time to be missing the market, man. I don't care what anybody says. This is prime time. This is the type of momentum we've waited for all year long. And so, I will say that I'm grateful to be green on the week, but I am a little disappointed rather, in my performance this week. If I can get the tab here. Yeah, I'm a little disappointed in my performance this week. As you guys will see here, we're green just $1,400, which is, at this point in time, a scratch trade. This is me having a really good trade on just one stock on a given day right now. And so this is very, very underwhelming for the type of week that we've had. And you guys will see that for the most part, I did step up, trading above average volume, 600,000 shares. But as you guys know, we had I would say our worst trading day here throughout the year, emotion wise, right? There's been other green days, other big days where stocks have moved and we've underperformed, due to us starting red and having to fight our way back. But that's usually pretty good and understandable because we're being aggressive, we happen to get caught in the wrong places, and we had to fight our way back. This week I encountered after maybe for, let's say, in years really, a lot of frustration, and it all started from something so silly. So we're grateful for the green, but there's a lot of lessons that we can take away from this week and apply them into future markets, whether next week or next month, whenever, to be better in similar situations. That's what it all comes down to. So just for perspective, right, let's take a look at last week where we did about 7,000 versus this week, right? And we also traded less volume here, you guys will see, for an average of 1,300 versus this week an average of 200, which takes us back almost as if we're 2 years ago, right? So in terms of today, right, let's narrow it down. Let's talk about how we were able to make $1,000 today, and what we can do better for next time. So we'll start off by seeing here, we went slightly red, just a slightly red, like 70, $80. And then we got things going. We got ourselves up to about 1,900 before giving back a fair amount of profits here to end the day. It started off with one big flush here, which we'll check out as we go throughout the recording. Let's jump into it. So let's pull up the charts. And let's take a look at some of these stocks that we traded today. So SMFL, RMCO, right? I ended red on a few of these, small red. And to start the day, you guys will notice that, you know, things are a little tricky, right? This was one of the main stocks here, RMCO. Decent pre-market charting, but coming into the open, man, was this thing rough. It was volatile, which was providing some opportunities in some areas, but ultimately a little too tricky. And so from a low of 419, we got to a high of 440. And these were the areas where I was trying to get some entries, but very difficult, very tricky price action, very volatile price action. Ultimately was better off leaving it alone as it downtrended. So I realized, okay, small loss, small size, let's not overdo it. Let's move on to the next stock. So we had SMFL, which also moved up early into the open. So minute number 3, we had a push here from 215 up to 26, up to 245, and then 260. But, you know, I just could not get a grip on this one, man. Could not get a grip. Sometimes it's that way, right? Where certain stocks are just not as compatible with it. And you'll see, of course, trading the other one. I'm a little late here, coming in at minute number 4, missing out on 2 of the bigger green candles of the day. And, you know, I wouldn't consider this backside by any means, but capturing these first 2 green candles definitely could put you in a much better situation rather than coming as we're starting to pull back and then consolidate, right? So for my style of trading, I'd say these are the more trickier entries. For other people who maybe they don't really love when the stocks are going straight up, this right here is where they will consider, hey, this is where my bread and butter, where I love to trade. I don't mind the consolidation, but I prefer the move up, right? The move up is where I usually do my best, and we ended up finishing small red right here. So in terms of potential entries that I could have took if I was watching this early and how I could have managed risk, first and foremost, we had a sideways start, and then the 1 minute candle making the new high over 15. This is usually a trade I'd be watching at, and I'd look to be in at 15 or in anticipation of the move to 15 or over 15. Let's say we're coming up 09, 10, 11, 12, pushing up. I'm watching for an entry in that kind of area with tight stops. Hey, if this thing drops back to about 08, 07, maybe even higher than that, depending on how the price action is coming in, I want to be out quickly to make sure that I'm, you know, keeping my risk tight. But from 15, it goes all the way to 45. Sweet pullback in here down to 30. I mean, this is what it comes down to right here. This is what we call the baby pullback. And from 30, it holds. Relentless, how do you know to buy at 30? Well, I'm also using level 2, right, guys? Level 2 is an instrument that shows me where people are looking to buy on the bid, where people are looking to sell on the ask, and all the orders that are coming in real time on the time and sale. So I can see when there's a lot of red going through and people are selling. And when that selling starts to ease at a level such as 30, I'm looking to be in the stock, riding the move back up. Tight stops, same way. Hey, if this thing comes down to 20, 25, I'm looking to get out. Tight stops, 5 cents risk. When I take big losses, it's usually because the stock goes down so fast, so quickly, that I didn't even have a chance to get out. Some stocks will drop 60, 70 cents. Boom. That's the only time I'm really taking a big loss, right? We make a few mistakes sometimes here and there, but, you know, when we really take a big loss, that's what's happening to us for the most part. So this candlestick here, you know, we had a dramatic wick down, and we look at this particular entry here for the VWAP pullback, but I wasn't as certain about the price action on the way down. And so you can see I took multiple attempts here, 33 towards the lower end of the candle, but was not super confident, and ultimately missed the move back up here to 57. Because best case scenario, we're in down here and we're riding the wave all the way back up to the high of this green candle. So that was essentially SFML. RMCO, well, this was the one we just mentioned. Let's come on down to the list here. POL was a stock that did incredibly well on Wednesday, right? Nothing like we've ever seen before for this cheaper price range, high halt bands and so forth. So we started off by doing very well on the way up, smaller size primarily. I believe I was using 1K block. Yeah, I was using, so I had small size. I was using 1K shares going up. And we did fairly well. We caught some decent trades. I definitely think I could have been more aggressive, but the way how the stock started off, initially I didn't realize that on the daily, we had the first candle to make the new high. So I could have been using more shares here. Initially I thought maybe, hey, just a bit of a quick pump up, and who knows what this thing does, because sometimes when these stocks are making another move like this, a bit of a relief bounce, there's short sellers covering, that's what initiates the move. And sometimes we don't really do that well. And you'll see, it didn't do that well compared to the other day, right? But we still got ourselves green. And on the move down here, trying to get good dips, we ended up going from green 550 to flat, and then ultimately small red here towards the very end of the move. Not good. Not good at all. I think on a stock like this, in terms of patterns, we had the halt pattern, a couple of baby pullbacks on the way up. Those are usually the two patterns you're going to get on a move up. That and the high of day breakout that's continuously happening over and over. Because for today's high at one point it's 470, and then it's 484, and then it's 537, and so forth. So again, reading the level 2, watching these small dips in there, and then the move up. Watching for these entries, the new candle opens, we push higher, and then again it pulls back, and then it curls up, and then it pulls back, and then it curls up, and then we get into the halt pattern where it opens up sideways, it dips, and then it rips. Those are the trades that I was taking on the upside to do well, keeping my wrist tight. But then on the downside, I think first and foremost, too many attempts. You have to realize, hey, when these stocks are pulling back sometimes, that bottom is very, very difficult to identify. That's the first things first. And after one or two attempts, sometimes you just have to let it go, despite if the stock still looks good. Because what I can do, instead of being too aggressive in this range here, I can wait for the move back up, ease off here. Let's say we take one or two losing trades right here, right? Presumably not getting caught in this flush, because this type of red candle, if it's bad, if it's too much size, just like that, even with a nice move up, you can get back a good chunk. But what we can do is be more patient, let the stocks price in the low, and even if we're not super confident with some of the dips, we can wait for the incline and trade the move going back up, right here. Other than that, if we are going to be involved, we got to position ourselves as best as possible. Right here might have seemed like a great area. We had a quick small bounce, but then boom, halted down, resumed lower. So right here is where we got to be careful to not be buying super aggressively and getting caught in this kind of flush, and being more patient for levels like this, right? So, okay, we price in this low. It's our first low point right here. Look at how well it essentially respected this kind of zone down here every time it came down. Especially this candle right here. Bit of lighter volume, but it held up nicely. And the initial low was at 07, then we had 14, and then again here 11. And from there, really and truly, if you capture this trade nicely, you only need to be in once. In once, out right here, right, as we're pushing up. Or here, you're in. If it doesn't break the lows, there's no reason to get out. And boom, selling into the big move up. Or even if you say, the red candle comes, then you take profits like over here. There's no real reason to be in and out 100 different times if you don't need to be in and out 100 different times, right? POL. Looking at charts like this, it's like, if you need to only take 10 trades a day, you really truly can take 10 trades a day. You just have to be patient, So that was POL. I think at this point is where we were up closer to 2K, and then we gave back. This is around later morning. The bulk of our gains came on NXTP, and I had a hard time with this stock here initially. Had a hard time with this one earlier in the move, misreading the dips. And so again, similar to the other stock, let's pay attention to this gray area here. because the breakouts after this first push were not that good, right? So we had the first initial push, bit of a 3-bar play right here, which is another one of the patterns we like, but turns out to be a bit of a false breakout. Then we get a surprise bottoming wick and a move up. Okay, nice, sweet push, and then comes the consolidation. The first low that we get here is a 203. We curl back up aggressively to 240. And I believe this particular trade I bought higher at 16 or 14 and got chopped out. It came down to the whole dollar first. And then again, right here, lows of 203. So this essentially double bottoms. And from 203, if you wait a few minutes after being in low, it never breaks down below 2. Never breaks down below 2 and curls all the way back to 25. Gives a small quick pullback right here. The 1-minute candle makes a new high. And then from 25 up to 30. I think in this range I was essentially flat. And of course there were some other stocks moving. You're kind of watching different stocks and stuff like that, but I think I could have done a better job here with the analysis, reading this one on the consolidation. Likewise with the other one, right? It comes down to being more patient, watching for that low to get priced in, and then from there utilizing that as risk and moving forward. But you have to be fearless, because sometimes what prevents us from getting into these nice sweet trades is that we know there are days where instead of stopping right here, the red candle keeps going down. But market sentiment plays a role. Hey, we're in a good market right now, things are holding up fairly well. You have to have that wind. Remember that wind is at your back, and take the trades, right? So we ended up pulling away, and in the first portion of this move, I was not being aggressive because I had a ton of trend lines up here from previous candlesticks on the daily chart where we rejected. And so I'm watching this thing like, hey, we might see a ton of resistance. So again, going back into April and a couple other months, we came up to these levels with fairly decent volume, sold off. This time not a ton of volume, but still sold off. So I'm like, man, I don't trust it yet. I'm not going to size up. But this thing just absolutely ripped and got halted up at 288. Resumes at $3 and then ends up going to 360 and 370. On the move up, I captured a decent amount, I think like 700, but I think about 50% of my trades were like coming down to the millisecond timing, being in, coming out a little too soon, things like that. Missed a ton of opportunities on that way up, on the move up right there. But nevertheless, we got green, and we were very careful. I think in this consolidation, we did a much better job being more patient and trying to wait. And so, we didn't give back any progress here on this consolidation. So that was a much better, much more discipline, much more patience, waiting for some of the key levels. But you can see ultimately, okay, we came down right here and right here, but we never got that breakout. It just sold off. And this is why it's important for us to keep the risk tight. Even if we're watching it down on the lower end of the zone, we got to stop out tightly, because sometimes what happens to some people is that they're buying right here, and then it comes down so fast, instead of getting out, they end up freezing. And before you know it, they're saying, you know what, I'm going to buy here, I'm going to buy here, I'm going to buy here, and I'm going to hope that this thing curls up. So when you do all the buying down here, you're taking on an incredible amount of risk, and your average cost, let's say, comes from 313, maybe it comes down here to like 294, 295, and you're hoping the stock gets back here so that you can be back break even, right? But what happens? Boom, big drop, and now you're in 2, 3, 4 times as much size, and there's another washout candle like this. Guys, if we are disciplined, like even on the weeks like this where you mess up, right? It's like, with all this awful trading, we still managed to make $1,400 this week. It's like, on the worst case scenario, if you're disciplined to cut your losses, and there's a successful strategy that you're trading, if you are gaining the hang of the strategy and you're being disciplined about stopping out, there is no reason why you should be having a hard time with losses. Most of the losses are coming from us making mistakes and deviating away from the strategy, not cutting our losers. So this, if for anybody watching, whether you're a trader, you're trading this strategy, something else, you're not trading at all, you're thinking about it, it's a field you can make money, but just know that you have to be extremely disciplined. Extremely disciplined. The moment you lose your discipline is the moment you lose your account. And that's why it's so risky, because we're fighting against our very nature here every day as flawed people, flawed creatures, people with emotions, and we're essentially trying to be like robots. We're trying not to have feelings. I had way too much feelings on this week, is why I performed so well in some of the prior days. You're trying to be as centered as possible and as disciplined as possible. So if you're someone who, you're having a lot of issues in your personal life, spiritually, mentally, emotionally, this is not the place to come in unless you start to improve and you're willing to, you're willing to sacrifice, you're willing to surrender. You have to surrender. You have to surrender to the rules, right? You have to surrender to doing what's right, always. So, for those people who are religious people, for the people who are disciplined people in the gym, in their relationships, mentally, what are you doing and thinking when nobody's watching? Are you doing the right thing? Are you doing the morally correct thing? Are you doing the disciplined thing? And for those people who are willing to embrace that role, the market is going to be here to reward you for an eternity. And that's what this is. So look forward to being disciplined, look forward to being patient, and look forward to being rewarded. If you do not surrender yourself to the rules, you will not stand a chance. That's as blunt and as firm as it gets. And that's why they call me the most transparent trader out there, because there's no reason to hold back and lie to the people. We have to keep it straightforward. We have to let them know how it is. This is day trading. This is why there's so much opportunity. This is why there's so much risk. So with that being said, enjoy the weekend. Enjoy the holidays. Remember not to obsess over the market. The market will be here tomorrow, the next day, the next month, the next year. It'll be here for a very, very long time. So let's continue to progress. Let's continue to improve. Remember, if you can see it in your mind, you can hold it in your hands. Let's keep chasing our greatness. Check out those links down below. If you're interested in the classes, if you're interested in the chat room, the scanner platform that I use, everything is down below. Take a look at those links. It's been Relentless Trader. It's been a great week here in the markets, and we will be back ready to go on Tuesday. So stay safe, stay green, study up whenever you can, and we'll catch you guys next time.